I crunched some numbers to calculate the potential Bitcoin per share increase in Metaplanet with their new preferred instrument, Mercury. And if I wasn't already bullish, these numbers have made me even more bullish. I believe Metaplanet is the most undervalued company in the world and the most fundamentally sound company in the world. Without further ado, let's get into the numbers. To start, I'll just quickly go over some numbers that we'll be using in these future calculations. So the share price as of yesterday, it was 357 Japanese yen or $2.17. Metaplanet held 30,823 Bitcoin. Their Bitcoin per share is at 0.02146 Bitcoin per 1,000 shares, and Bitcoin's price is roughly $87,000. I'll start just by quickly calculating their current fully diluted shares outstanding by taking their Bitcoin holdings into account and their Bitcoin per share. And then I calculated out that they have 1.4365 billion fully diluted shares outstanding, which is pretty similar to the latest report on their shares outstanding that I noticed. But to keep things consistent, I'll just use this exact number here that I calculated. Now, looking at some of the metrics for Mercury, there's a conversion price at 1,000 Japanese yen. So if Metaplanet's common stock starts trading at 1,000 plus Japanese yen, we would start seeing some dilutive effects because shareholders of Mercury would likely start converting into the common equity, creating some dilution amongst that common equity. Additionally, the initial offering was at 900 Japanese yen, and there's a proposed issuance of 555 million shares of Mercury stock. Now, running through a hypothetical scenario, let's take the proposed issuance of 555 million shares, multiply it by that initial offering of 900 Japanese yen per share. If they were able to get demand for all those shares, that would raise 500 billion Japanese yen, which is the equivalent of roughly 3.2 billion US dollars. If we take that and divide it by an average price of $100,000, if they were to say buy Bitcoin at an average price of $100,000, they would be able to buy 31,800 Bitcoin, which would double their stack. If Bitcoin's price did go down, it would be exponentially more accretive actually, because if this price goes down, that $3.18 billion could buy a whole lot more Bitcoin, which would increase their Bitcoin per share exponentially if Bitcoin's price were to go down. If Bitcoin's price does go up, it does get less and less accretive as Bitcoin's price runs up on the other hand. Now let's take a look at the dilutionary effect of Mercury. Let's say that there is a 100% conversion rate and all 555 million Mercury shares, assuming that they get enough demand for that, get converted into common equity. Since the terms of Mercury give it a 1-to-1 conversion ratio, 555 million Mercury shares would just turn into 555 million shares of the common equity. So we would take the 1.4365 billion fully diluted shares outstanding, add 555 million shares that got converted from Mercury to the common stock, and then we get 1.99 billion fully diluted shares outstanding. However, we can take the Bitcoin acquired from Mercury. So if they were able to get 31,800 Bitcoin, if they happen to get an average price of Bitcoin at $100,000 per Bitcoin, adding that to their current Bitcoin holdings would get them to 62,623 Bitcoin. If we take that and we divide that number by their new amount of shares outstanding, that 1.99 billion shares, and we would get 0.03146 Bitcoin per 1,000 shares. And then if we took that, subtracted it by their current Bitcoin per share, 0.02146 Bitcoin per 1,000 shares, we get an additional zero point zero 0.01 Bitcoin per 1,000 shares. If we take that number, divide it by their current Bitcoin per share, we get a 46.6% growth in Bitcoin per share from Mercury, assuming all 555 million Mercury shares get converted into the common equity. I mean, just think about things for a second. Metaplanet is currently being valued at less than their Bitcoin on their balance sheet, yet they have this single instrument that has the potential to grow their Bitcoin per share by 50%. I'm not saying that's going to happen. I think it would actually be quite difficult to be able to get all this demand into this preferred instrument and be able to buy Bitcoin at an average price of $100,000. However, if you look at strategy, for example, for them to be able to grow their Bitcoin per share by 50%, they would need to get to about 1 million Bitcoin with no further dilution. So the fact that Metaplanet even has this kind of Bitcoin per share growth potential with a single preferred instrument, this doesn't even account for Mars or any other future preferreds or any other method of accumulating Bitcoin. This single preferred instrument has the potential to grow Metaplanet's Bitcoin per share like crazy. And the 4.9% dividend they would have to pay out on this instrument is practically nothing, especially looking at Metaplanet's revenue to be able to support these dividend payments. I mean, in Q3 alone, Metaplanet had 2.4 billion Japanese yen in revenue. That would be enough to pay almost half of the quarterly dividend for Mercury if all 555 million shares of Mercury got issued. However, their underlying put option business is highly scalable. We can see between QT and Q3, they were able to more than double their revenue. And on top of this, that doesn't include any potential revenue for Bitcoin.jp or Project Nova. So I feel pretty confident that Metaplanet's revenue will be able to support these preferred payments. And having these profitable underlying businesses creates a whole lot more upside and a whole lot less downside for Metaplanet. Because say in the case of a drawdown in the price of Bitcoin, that would likely bring the stock price down. And if you had to pay off your preferreds by only issuing equity, during a Bitcoin drawdown, you would have to issue more and more equity because your stock price is going down, which would become exponentially more dilutive towards your shareholders. However, if you have these profitable underlying businesses, if Bitcoin's price starts drawing down, rather than needing to issue more equity, you could just pay the dividends with the profits from these underlying businesses. So then when Bitcoin's price goes down, it would actually be more and more accretive for you because you're not diluting shares and yet you're still generating capital, you're still bringing in capital from these preferreds, and you're using that to buy Bitcoin at a cheaper price, giving you more and more Bitcoin relative to the amount of capital you raised into the preferred instruments, which would be exponentially more and more accretive even if Bitcoin's price goes down. And if Bitcoin's price starts pumping, then that means that Metaplanet's underlying assets start going up, meaning that Metaplanet stock would likely go up, which would likely create an upward reflexivity loop, expanding Metaplanet's MNAV back up, in which case issuing equity would become exponentially more and more accretive. So in that case, Metaplanet could issue equity to pay off the preferreds, and then they could potentially use this revenue to buy more Bitcoin, or they could do it vice versa. They can buy Bitcoin by issuing more equity. It doesn't really matter. Either way, it becomes exponentially more and more accretive to the shareholder. So yes, I've seen people running to the comment sections saying how the share price has gone down, but the fundamentals have grown stronger than ever. In my opinion, this is just a blessing to be able to buy at these prices. I mean, the company is literally being valued at less than the Bitcoin on their balance sheet because people saw the price go down, even though the fundamentals are stronger than ever. My name is Zane Gillespie. If you like this video, please consider liking and subscribing to support my work.